All right, let's jump right in today. We're doing a deep dive into VRL Logistics, specifically their Q2 FY25 financials. And wow, you guys have really given us a lot to unpack.
Yeah, definitely a lot to cover.
We've got their official letter to the stock exchanges, the unaudited financial results, and their earnings presentation too.
Right, the whole package.
Now, some of you might already know VRL Logistics. They're the top player in India when it comes to B2B parcels, right? Especially that less than truckload stuff.
Yeah, they're the leaders.
But what's really fascinating to me is that they own most of their trucks and even the infrastructure. That's not something you see every day in this industry.
No, not at all. That owned asset model is pretty unique.
So what we really want to figure out today is, what do these numbers tell us about their future? Are they set up for continued success? What do you think?
Well, right off the bat, something that really jumps out is they declared an interim dividend of RS5 per equity share. That's definitely a good sign, especially for investors.
For sure, for sure.
But, okay, let's really get into those growth figures. Their total income, it's up 12% year over year. And, get this, 8% compared to just last quarter.
Wow. Yeah, that's some serious revenue growth right there.
Yes, starting strong.
But, revenue is only part of the story, right? What we really want to see is profitability. Are they actually turning that revenue into profit? I think that's what a lot of people who follow the company's stock are really interested in.
Absolutely, and that's where VRL's performance really shines, I think.
Okay, tell me more.
Their EBITDA.
Yeah, earnings before interest, taxes, depreciation, and amortization.
Exactly. That's up a huge 39% year over year, and hold on, 33% quarter over quarter.
Those are big jumps, you're right.
Right. It's a solid indicator of operating profitability.
Yeah.
And then there's their profit before tax, the PBT, up a whopping 82% year over year, and, are you ready for this? A staggering 180% compared to the last quarter.
Wow. Okay, so these are some serious numbers. What's driving this kind of success?
Well, one key factor is they've managed to successfully implement freight rate hikes, and not just in a few areas, across all sectors and geographies.
Oh, so they're not just moving more goods, they're actually earning more per ton, too.
Exactly. That's the key.
That's interesting. But what does that mean for their customer base? Could this strategy backfire, drive customers away?
That's where their pricing model gets really interesting. They mainly work on a to-pay system.
To pay?
Yeah, so they collect the freight charges from whoever's receiving the goods upon delivery.
Ah, I see.
It means faster revenue collection. They're not as reliant on extending credit. A pretty smart move, especially with the economy the way it is these days.
Yeah, definitely a clever way to manage cash flow and reduce risk. But what about those existing customers? Are they sticking around with these price hikes?
Well, get this. Their customer base has grown to a massive 9 lakh customers.
9 lakh, seriously?
Yeah. And a big reason for that is actually because of the GST, the goods and services tax. You see, with all the new compliance requirements, a lot of businesses are moving away from those unorganized logistics players.
They're looking for more reliability, right?
Exactly. And they want someone who's going to make sure everything is compliant. That's where companies like VRL really stand out.
So they're benefiting from this shift towards a more structured logistics sector, all thanks to the GST.
Precisely. They're really capitalizing on this trend. And their impressive EBITDA margin of 17% is proof of that.
17%. That's a great margin. It tells me they're managing their costs effectively.
But hold on, we're in a high inflation period right now. How are they keeping those expenses under control?
Well, there are a few factors. One is their owned asset model, which we talked about earlier. Remember, they own a whopping 82% of their vehicles.
Yeah, it's wild.
That means they don't have to rely on hiring vehicles as much, which can be a big expense.
Gives them a lot more control over costs,
Yeah.
too. Right. Absolutely. Then they've also been smart about buying fuel in bulk, getting lower prices that way.
Makes sense.
And on top of that, they've just been really careful about managing their operating expenses, even with all this inflation.
Wait, hold on. Did you say 82% of their vehicles are owned? That's unheard of in this industry.
Right. It's a huge advantage.
I was reading that they even have their own fuel pumps.
Yeah, they do.
Talk about cutting out the middleman.
It's a brilliant strategy. Controlling costs, maximizing efficiency, especially with fuel prices going up and down all the time.
Yeah, that level of, vertical integration. In the logistics sector, that's pretty rare.
Very rare. It's impressive.
It's like they've thought of everything to really optimize how they operate. Speaking of efficiency, their hub and spoke model really caught my eye. Can you break that down for us?
Sure. So they have these massive transshipment hubs, 50 of them actually, spread out all across India. Think of them like central points.
Central points.
Yeah, that's where all the goods come in, get sorted, and then sent back out.
Oh, I see, I see.
It's like a giant nervous system for their whole operation.
Yeah.
It lets them really optimize their routes, cut down on transit times, and just handle huge volumes of goods efficiently.
So it's all about being as efficient as possible. It's kind of like how airlines use those big hub airports to connect passengers to all their different destinations, right?
Exactly. It's a similar concept. And, they're not just sitting on this network either. They're investing in expanding it even further.
Oh, wow.
Just in the first half of FY25, they added a net 54 new branches. Plus, they're putting money into new transshipment areas they own, including a really big one in Mangaluru.
Whoa, that's a lot of expansion. You got to think, that has to be putting some strain on their finances, right? Are they taking on a ton of debt to fund all this growth?
Actually, that's the surprising part. Their debt has actually gone down.
Gone down? You're kidding.
Nope. And even with all this expansion, that really speaks to their strong cash flow from operations.
Yeah, that's a clear sign of a healthy business, for sure. They're generating enough cash from their core business to not only fund this growth, but also pay dividends and still manage to reduce their debt. That's really impressive.
It really is, and it's definitely not going unnoticed. They have a credit rating of A+, positive, which is a great sign for investors.
Yeah, that's like a big thumbs up from the financial markets, right? Saying, hey, these guys are low risk, they're reliable, and they're going to pay their debts. So far, everything we've seen points to a company with a really strong financial base and a solid track record. But what about the future? Where do they go from here?
Well, VRL has laid out some key priorities. Expanding their geographic reach even further is definitely one of them.
Makes sense. Got to keep growing.
Yeah, especially in those untapped markets.
Oh, interesting.
Then, of course, they're focused on volume growth, too.
Got to keep those trucks moving.
Exactly. But they're not just going for growth at any cost. They're being smart about it.
Smart how?
They're making strategic freight rate adjustments to make sure that growth is profitable. Remember, it's not just about bringing in more revenue. It's about making sure that revenue is sustainable.
So they're not just chasing growth blindly. That's reassuring for investors who are thinking long term.
Absolutely. And to support that growth, they're also planning to keep expanding their fleet. As the tonnage grows, they'll need more trucks to move it all. It's a clear sign of their commitment to long-term expansion and being the leader in this market. But we can't forget about the competition.
Oh, right, right. It's getting pretty crowded in the Indian logistics sector, especially with all these new tech-driven startups popping up.
Exactly. And they're really shaking things up.
Yeah, these new guys are all about using technology to streamline things, making everything more efficient, giving customers more transparency. How's VRL, more of a traditional player? How are they keeping up with all of this?
That's a great question, and it's something we'll dive into after a quick break.
So we were talking about those tech-driven startups, the ones that are really shaking up the Indian logistics scene. It's a pretty exciting time for the industry.
Definitely a lot of innovation happening.
Yeah, these new players are all about leveraging technology, right? They're optimizing everything, making their operations super efficient, and giving their customers way more transparency. It's a whole new ballgame.
It is. But, it's easy to think of VRL as this old school player kind of stuck in their ways.
Yeah.
But they're not just sitting back and watching this happen. They're making some big moves in the tech space, too.
Oh, really? Tell me more about that.
Well, for starters, they have this really robust ERP system.
ERP.
Yeah, Enterprise Resource Planning. And get this, they developed it all in-house.
Wow, that's impressive.
It is, and it lets them do real-time tracking of all their operations, like how consignments are moving and all that.
So it's not just about having all those trucks and hubs, they're also embracing the digital side of things.
Oh, absolutely. And this isn't just some internal thing. It actually gives their customers a lot of visibility, too.
So they're keeping up with those tech-focused startups in terms of transparency and that sort of thing?
They are, and they're taking a very holistic approach,
All
really.
right.
Yeah, they've got systems to monitor everything, like how the vehicles are moving, how much fuel they're using, even driver advances.
Wow, they're really tracking everything.
It's all about the data, right? And that data lets them optimize routes, improve fuel efficiency, and even manage their workforce better. It's the same data-driven approach that a lot of these new tech companies are using.
It sounds like they're taking technology pretty seriously. But how about the stuff that directly impacts customers? Like online booking platforms or real-time tracking that customers can actually use themselves. Are they doing anything like that?
Oh, they've definitely stepped up their game in that area.
Okay, good to know.
They have a pretty sophisticated consignment management system, so customers can track their shipments in real time. It's very similar to what you see on a lot of those newer platforms.
Makes sense. Got to keep up with the times.
Right. Plus, they've implemented systems for e-way bill generation and e-invoicing, which make sure they're compliant with all the GST regulations.
So it's easier for customers to do business with them, but they're also staying on top of all the legal stuff.
Exactly, covering all the bases.
Mhm.
But technology is just one piece of the puzzle, right?
Right, right. What else really sets them apart? What are some of VRL's core strengths?
One of the biggest things is their experience. They know how to handle a huge variety of goods, and I mean everything. Industrial stuff, automotive parts, food grains, textiles, even fragile items. They've got it all covered.
So they're not just specializing in one specific type of cargo?
Nope. They've got the experience and the infrastructure to handle almost anything you throw at them.
That's got to be a big advantage in a market like India, right? I mean, it's so diverse.
Oh, absolutely. And that's where their nationwide network really comes into play. They can reach pretty much every corner of the country, which is huge.
It sounds like they have a lot going for them. But at the end of the day, it all comes down to their customers, right? If they can't attract and keep those customers, none of it really matters. What can you tell us about their customer base?
Well, their customer base is really diverse. It's all B2B, spread across all sorts of different industries.
Okay, so they're not relying on just a handful of big clients.
Exactly, which is a good thing. No single customer accounts for more than 1% of their revenue.
Wow, that's pretty spread out.
And even their top 10 customers, they only make up less than 3% of their goods transportation business.
So they're not overly dependent on any one particular industry or customer.
Nope. That diversification is really important. It means they're less vulnerable to any sudden changes in the market.
Yeah, that's a smart strategy for sure. But let's be real, in a competitive market, everyone's always looking for ways to save money. How does VRL handle their pricing? Do they offer discounts, or do they mostly stick to fixed rates?
Their pricing model is actually pretty unique. It's one of the reasons they're able to collect revenue so quickly and keep their cash flow stable.
Okay, I'm interested. Tell me more.
Around 70% of their revenue comes from to pay customers.
Right, right. We talked about that earlier.
So they're not waiting around for customers to pay their invoices. They collect those freight charges right at the delivery station from the person receiving the goods.
Ah, so it's like cash on delivery, but for freight.
Exactly. It minimizes their risk of bad debts and keeps the money coming in.
Makes sense. Smart way to manage cash flow when you're dealing with so many transactions.
Absolutely. And then they have a good chunk of paid customers too, where the freight charges are paid upfront right at the booking station.
So it's a good mix of upfront payments and payments upon delivery. It's like a strategic balancing act. Now, let's talk about those trucks for a minute. They have a pretty impressive fleet, right? You mentioned earlier that they own a big chunk of their vehicles. Just how big are we talking and what kind of vehicles are they running?
Their fleet is massive. They have over 6,158 goods transportation vehicles right now. That's a total carrying capacity of 87,087 tons.
Wow, that's a lot of cargo they can move. What kinds of trucks are we talking about here?
They have a real mix. Small trucks, big heavy-duty ones, even trailers.
So they're equipped to handle pretty much anything.
Exactly. That variety is what lets them cater to so many different customer needs and cargo types.
It sounds like they've got a vehicle for every situation, but managing a fleet that size, it can't be easy, right? How do they make sure all those trucks are running smoothly and reliably?
Maintenance is a huge priority for them.
Okay, makes sense.
They have their own maintenance facilities spread out strategically across India.
So they're not outsourcing that.
Nope, they handle it all in-house. It means their vehicles are getting serviced and maintained regularly, which minimizes downtime and keeps everything running efficiently.
Smart move, especially in the logistics world where time is money, literally.
Right, and they keep a good stock of spare parts too, so they're not waiting around if something needs fixing.
So they're not skimping on maintenance. That's good to hear, especially in an industry where reliable transportation is everything. But fuel costs, they're always fluctuating. How are they dealing with that?
They're doing a few things. One is buying more fuel in bulk, straight from the refineries.
Oh, so they're getting better prices that way.
Exactly. Plus, they're really good at monitoring fuel consumption for each vehicle.
How do they do that?
They use their technology platform to track it all.
Ah, so data comes into play again.
Always. And that data helps them figure out where they can improve and how to encourage more fuel-efficient driving.
So they're taking a very data-driven, proactive approach to managing their entire operation. We've talked a lot about their strengths and how well they're doing now. But what about the future? What are some of the challenges and risks VRL might face going forward?
That's a really important question. And one of the biggest things they have to deal with is the increasing competition.
Right, right. We talked about those new tech startups shaking things up.
Yeah. And it's not just them. The established players are upping their game too.
So competition is heating up from all sides. Are there any other potential roadblocks they should be thinking about? Things that could affect how well they do in the future?
Well, fuel prices are always a wild card for transportation companies.
Yeah, makes sense.
Even with their efforts to manage those costs, if prices spike significantly, it could really impact their margins.
Yeah, definitely something to keep an eye on.
And then there's the overall economy. If India's economy slows down, the demand for logistics services could drop too. That would hit their volume growth.
So they're facing a lot of external pressures, things they can't really control.
That's true. But, their financial health is strong, their customer base is diverse, and their operations are efficient. All that gives them some breathing room, some resilience.
So they're in a pretty good position to weather the storm, at least for now.
They are, but they can't just sit back and relax.
Right.
They have to keep innovating, keep adapting to the changes in the market, and stay ahead of the competition. Which brings us to a really crucial question.
You were about to say a crucial question. What is it that's on your mind?
Yeah, so we've seen how well VRL's doing, all their strengths. But with all these changes happening, the question is, can they really become the undisputed leader in Indian logistics? With all this tech disruption going on.
It makes you wonder, right? Like all those things that make them strong now, could they actually hold them back in the future? I mean, they have all these assets, all this operational expertise. But could that make them, I don't know, less agile compared to those tech-focused companies that don't have all that baggage?
That's the dilemma, isn't it? That owned asset model, it's been their bread and butter for so long, giving them control and efficiency. But now, with everyone moving to these asset-light models, more flexible, it's a tough spot to be in. Can they adapt fast enough? That's the million-dollar question.
And then there's the whole market landscape, right? What's the future of logistics in India looking like, and how does that play into VRL's growth potential?
The Indian logistics market, oh, it's about to explode.
Yeah.
Seriously. E-commerce is booming, the government's pushing infrastructure development, and everyone wants a more efficient supply chain. It's all pointing to massive growth.
So the pie's getting bigger.
Exactly. And VRL's got a good chance to grab a bigger slice.
But like you said, the competition is fierce. What do they need to do, not just to survive, but to really dominate this market as it changes?
Innovation. They got to keep pushing the boundaries. It's not just about using technology. It's about using it to create new solutions, make things better for their customers, optimize everything they do.
So it's about finding that balance between what's worked for them in the past and being able to adapt to the new realities of the market.
Exactly. It's a delicate dance, but from what
Uh-huh.
we've seen today, they seem to be doing all right, at least for now.
Yeah, definitely a lot to be optimistic about. So any final thoughts as we wrap up this deep dive into VRL logistics?
Well, they're definitely at a crossroads, I'd say. They've got this amazing foundation built on operational excellence, a huge network, and they really understand the Indian market. But the future, it belongs to the innovators, the ones who can embrace change. The question is, can VRL change fast enough to stay on top, especially in an industry that's changing so rapidly?
That's a great point. It's something for everyone to think about, not just those following VRL. So VRL Logistics, a proud history, a strong present, and a future full of potential, but also some big challenges. We hope this deep dive has given you a better understanding of where they stand in the Indian logistics market, a market, as we've seen, that's evolving at an incredible pace. That's it for us today. Keep exploring, keep learning, and keep diving deep.